Hello everyone. Today's video is all about the procure to pay business process where we're going to discuss a complete end-to-end explanation of P2P process as used in SAP and standard business operations. This video is divided into two parts. First part consists of explanation and second part contains the execution of P2P process in SAP systems. And the second part of the video will be published very soon. This video is suitable for training, interviews, and presentation. So let's understand what is P2P process. P2P is the end-to-end business cycle that covers all activities involved in procuring goods or services from a vendor and making payments to them. It integrates with SAP material management subcomponent and also with the finance. Now the question is, what is procurement? See, every organization acquires materials or services to complete its business needs. The process of buying material or obtaining services from vendors or suppliers specific to contract or agreement is known as procurement. So procurement process should be done in such a way that it is ordered in correct quantity with a competitive price at the right time. So it's a typical business cycle where a determination of the requirement that we call technical as PR, purchase requisition, which will be converted into purchase order, subsequently to invoice after receipt of goods and culminate finally with the payments to the vendor. And the P2P process goes through various stages. It has a different stages that each stage what are the activities that are going to be executed that we're going to discuss. And the first stage is procurement stage, or it's otherwise known as requirement gathering. So this is the stage where internal department or the user department of your business identifies a needs. So internal department could be your production planning MRP department, it can be your maintenance department, it can be your project team, or this requirement may comes from the employees as well. Okay. So when they identify the needs, the material requirement then recorded in a document called purchase requisition. In short, it is known as PR, which is then forwarded to the purchasing department after the necessary approval. So when somebody asks you what is purchase requisition, so you need to be aware of that purchase requisition is an internal document which is issued or created whenever the goods, both stocks and non-stock goods or services are required. So several types of documents will be available to be used. SAP system checks automatically various parameters like budget availability and requires an approval workflow, or maybe requisition may be based on its value or internet delegation of authorities, as well as other technical parameters like item categories or purchasing groups. So the requisition created in the system can also be revised if needed. So purchase requisition can be created automatically through MRP, that is through MD14 transaction code, or through manually through ME51L. And in this case, we need to maintain certain master data in material management like material master, service master, and stock availability. These are the masters need to be checked. Next one is second stage is source determination. So it is necessary to look for the suppliers who can satisfy the requirement after we create the purchase requisition. And the purchasing team identifies the suitable vendors as it is represented in your SAP, in your graphics. So source can be determined by referring to the past orders and the existing agreement of the organization with external suppliers or vendors. And for that, we can check transaction code ME57 to check whether the required material services can be obtained from existing contract or agreement. So based on PR, a request can be made to the supplier, and that request is known as RFQ, request for quotation, or a direct contact can be made with the vendors. So RFQ sent through various output processes. You can send it through email, fax, DI, or print. You can also upload the RFQs in your supplier website. So request for quotation is a formal request to a vendor by your purchasing organization to submit a quotation for the supply of materials or performance of services. So when the vendor submit their quotation against the RFQ, vendor is going to submit the quotation. And the quotations are entered in the system by using transaction code ME47. The quotations are then compared for their financial and other feasibilities by using a transaction code ME49, which is otherwise known as price comparisons. After which the organization selects a particular vendor to supply the required materials or services. So here we have certain master data that needs to be checked, like source list, quota arrangement, and information record. That is called purchase information record or PIR. And all these master data will be maintained by your logistic or side, material management module. And the third stage is vendor selections or background reviews, or you can say price negotiation. So based on the RFQ responses, the buyer select the best vendor. That means your business is going to select a vendor. So once the supplier is known, product and services or quality is checked, and any necessities for the services such as installation, warranty, and its maintenance are investigated, and some samples of the products can be obtained for quality examinations. And based on the, when somebody asks you what are the evaluation criteria of the vendors, so it may be price, your delivery time, quality ratings, past performance of the vendor, payment terms, and commercial condition. Based on those parameters, you can evaluate the vendor or select the vendor. Next, the fourth stage is contract on scheduling agreement. So some negotiation with suppliers are made regarding the price, availability, and delivery schedule of the product and services. So that is the contract. After this contract is signed, so contract is nothing but a binding legal document between supplier and your business. And a contract can be created in SAP system through a transaction code known as ME31A, which will include all the necessary information like price and quantities of material, delivery dates, etc. And the next stage, that is the fifth stage, is creation and processing of the, that is called purchase organization. After selecting a vendor and signing a contract, the organization create a purchase order with the transaction code that is known as ME21N, which is most popular transaction code in the logistics side. And this purchase order is created for the selected vendor. Purchase order can be created against the contract, or it can be created against the purchase or that is purchase requisition, or we can create standalone manually through ME21. And purchase order is a legal document issued by an organization to its vendor. So it is the phase when order is created against a requisition or against the purchase requisition and send for the approval. That approval is technically known as a release strategy with the transaction code ME28 and assigned to a supplier. So in a common project, business deals with a different type of purchase order. We can have a standard purchase order and a special purchase order. Under special purchase order, we have consignment purchase order, subcontracting purchase order, stock transfer, returnable transport packagings. Okay, these are some of the different special purchase order is there. And standard purchase order, under the standard purchase order, we can have like asset purchase order, expenses purchase order, material purchase order, service purchase order. So different type of purchase order which will be created in the material management side, which we'll discuss in the coming days. And purchase order includes the material or services details, quantity, price of the material services, delivery date, tax and other conditions like pricings, purchase organization or purchase group, and other terms or conditions that may be included. And the next stage is order fulfillment or goods receipt. Once the purchase order is created, it will be sent to the supplier. So it is the phase in which the business received the material and the condition and qualities are verified. So when you receive the goods, that is known as goods receipt. Training, installation of products or services may also be included in this page. So when the store people receive the material or services, they have to post the goods receipt with a transaction code known as MIGO, MIGO, or service acceptance documents and update the purchase order history. So a goods receipt allows the warehouse department who ordered the purchases to certify the received quantity of goods, while service entry allow them to certify the acceptance of services. So both tasks are performed only in relation to a purchase order, or you can do it with a contract release order as well. Once the valuated goods received and posted, it triggers an accounting entries. What is that accounting entry? When you post the goods receipt, your stock account or inventory account will get debited and your GRI account get credited. And along with, if there is any freight charges will be there, that freight clearing account will also be credited and associated tax account also will get credited. And the next stage, that is the seventh stage, invoice handling. After you receive the goods, vendor sends the invoice which was posted in the system through a transaction code that is called Miro or Miro. Either by purchase or your accounts payable team will post this invoice. So here once the system accept that invoice, here the system matches the invoice with that of the purchase order, goods receipt, and that is technically known as three-way matching. And in three-way matching checks whether or not the material services are mentioned in the PO have been received from the vendor. If value matches, invoice is posted. If discrepancy, it will block the invoice. In general, an invoice is attached with a goods receipt or delivery notes document and sent to the organization. Okay. So at the time of invoice postings, there will be an accounting entry where your GRI account will be debited along with all your taxes, input tax, and if there is any freight charges will be there, the respective freight clearing account also will get debited. And your vendor accounts going to credit along with the withholding taxes. Next stage, that is the eighth stage, is processing the payment. After posting an invoice receipt document, the organization has to pay to the vendor as per the terms of payments mentioned in the PO documents. Once the invoice is successfully verified, payment is released by your accounts payable team and PO history get updated. And at the time of payment, you also have accounting entries where your vendor accounts will be debit along with your input withholding taxes, and your outgoing bank clearing account will be credited. If there is any cash discount, you are getting it, In that case, cash discount account also getting credited. And after the payment, we have a bank reconciliation, which will be done in the finance side, and the finance people will do the bank reconciliation. Once the payment is, what is the payment amount that has to be reconciled. And at the time of bank reconciliations, our outgoing bank account be debited and main bank account will get credited. Bank reconciliation is a separate bank accounting topics which will be discussed very soon. And after this, we have a contract renewal. The contract can be renewed once the product or services are consumed or contract expires. It needs to be renewed, or the product or services is to be reordered. So company experience with the vendors and service provider is reviewed. So if the product or services are to be reordered, your business decides whether to order from the previous supplier or think about the new suppliers. So these are the complete end-to-end process, business process of your procure to pay. And next, what are the key takeaways? The first one is P2P process in logistics point of view, where PO and other purchasing documents are involved. Whereas in finance perspective, there is no PO. In that case, we can directly post the invoice through a transaction code FB60, where your purchase account will be debit to your vendor account. And to run the P2P process, proper integration setting must be placed in between FI and module through a transaction code OBYC. And how to do the integrations, how to do this mapping between these two modules, we'll discuss in great details in the coming videos. And when you are doing a goods receipt with different movement types will be involved, and especially when you do the movement type through 501, and we enter the delivery note as a mandatory fields. So during the invoice posting, process the vendor invoice verification with reference to the delivery notes. So by this, we can establish a link between our material documents and the vendor invoice. And also during this account ending entries, offsetting entry will be credited to the vendor account. Thereby, we can make the payment. So that's it for the now, for the time being. And next part, we'll be discussing how to execute this complete P2P process in SAP systems. And that is the second part, which will be coming very soon. Thank you so much.